What's going on, guys? How's everybody doing? Right on trade camp. This is gonna be fun. Um, yeah, it's what I hope that you guys gather from this is that you too could be a very profitable trader. And in fact, that maybe some of you are limiting your successes by trying to force this idea of what a good trader is. And I'm just going to show you guys the system. We're going to go through the system. We're going to go through its iterations. We're gonna go through this journey together. And by the end of it, you'll realize that whether you're seeking a point 0.3, a point 0.5, a 1, a point 1, a 1.5, it really doesn't matter. Um, we often see in the chats how individuals want to hold longer. And holding longer doesn't matter until you secure profit and you're compounding. Wealth is not being generated by that trade being held longer. It's generated by the compounding in what that trade does in adding to your dry powder. Now, if, I'm seeking a 4-to-1 all the time, I'm probably not going to compound as much as someone who's seeking a 0.5-to-1 all the time. Okay. So, what I want you guys to do, um, with this video, obviously I'm recording it locally so I can repackage it. You guys, you will have access to this video. I'll drop a link to, when YouTube finalizes the video, I'll send it back to all of you guys. But when you come back to this video, at a future date, right? I want you to do so with a new set of notes every single time. So whatever your notes are today, that's its own book, that's its own sleeve. When you come back to the video again, make it its own book or its own sleeve, right? And gather information. Because sometimes, and I'm going to prove this to you guys, sometimes it's all about how you interpret the information in front of you. And sometimes when we have a bias or we have a sense of, well, I know what he's talking about, he's sort of kind of like lose what I'm really talking about. And I just really want to point something out really quick. So you have no sound. Dude, that's your fucking problem. Everybody else has got sound, right? Like, that's a you thing. So, all right. Here's the deal. I want everybody. I'm just. Who wants to be mind blown right now? Who wants to be mind blown right now? We're just gonna. We are going to make you all have a holy fuck. I should have just listened to this guy a really long time ago. Are you ready to be mind blown? Ready? Okay, let's do this. Let's do this. I just want to just rip the fucking band-aid off because who has noticed that the energy of the community has changed maybe in the past 2 weeks when, GT Flip started getting the yellow markers? Who, who, who feels that? Who sees that? Who's seen that their trades are getting better because of GT showing yellow hazard zones? For sure. McD. Hey, hot potato, you there? Yeah. Yeah. Yep. Yeah, hot potato. Are you ready for this one? Okay. So you guys know I shared the story. I was just eating dinner or a sandwich, if you will. I just got hot potato and he said, do this. All right, guys, let's do this really, really, really quick. And then we're going to get on with um this trade camp. But I just want to set the tone here. How I want you to be sponges and listen and trust. This is so important. Trusting the system is so important. Here we go. Ready? Guys, let's do one in here. Okay, let's see if we can get a zoom. So you guys see these yellow line. You see the yellow line. It's like, oh my god, don't trade, right? It's like, oh my god, this is incredible. This works. This is incredible, right? Who agrees on this? I want to see some hands. Incredible, right? Yeah. Okay. You know what that is? It's just the little yellow X marks on trend tracker that was on the panel below. That's all it was. The little X marks. You know, when you ran a trade, you had the red bars, you had the green bars, and then you had the little yellow X's. I told Hot Potato, put the X's on GT500. Yep. Yep. It's true. With the old trend tracker, this yellow line would have just been a bunch of little yellow X's here. That's all it'll be. So now that I've got your attention, let's do the ultimate mindfuck. Because trading, guess what, guys? You're the algorithm. You're the algorithm. And if you aren't in belief in what you're doing, you're never going to get to where you want to be. Yeah. Okay. So we're gonna get ready to it. All right, let's do this. Okay. So everybody's had that aha moment, like holy shit, right? It's how you view things and how you interpret things, right? And more importantly, right? Before that, where the fuck was your patience? It wasn't there. Before that, where was your respect for the system? It wasn't there. It was right in front of your face. Right. You have to allow yourselves, guys, to fully submit to the system. So that's guys. All right. So let's the foundation and the logic behind 1348. 1348, the EMA equals momentum, and the 48 equals trend control. Let's talk about that for a second. Okay. Because there's so much emphasis on breaking an EMA or an EMA crossing, but really all it is that one EMA is governing another. The other EMA becomes an actionable EMA. The actionable moment is when the 13 and the 48 crosses. But the 13 is equivalent to a precision entry on the 1 minute. And then the 48 is equivalent to, let's say, maybe the 5 minute. It defines the trend, and the 13 tells you what you're doing inside the trend. That's all this is, boys and girls. Let's get back to the charts here. I want to show you something. Now, what we have here, the EMA cloud. Who remembers the good old EMA cloud? They're going to find us in GT Legends. Okay. And I took off the EMAs and I just enabled the cloud. Now, the reason why we're doing it this way now is because we want to remove the emphasis on the 13. We want to remove the emphasis on the 48. We want to focus on one thing and one thing only. And anybody have an idea of what that one thing is? Friend, trend. Focus on the trend, guys. We go ahead and and you know what? I'm gonna do this, right? So for those who have both Gabe trades and 1348, you copy the link. You could go ahead and let me. You want my chart? Let's simplify this for everybody. That's my chart. Go ahead and use it. Okay. As long as you have all the indicators from Gabe trades and trade 1348, you have my chart. Now, here's the deal. When you put so much emphasis on one thing happening, you end up isolating that one thing happening from the other thing happening, right? Yeah, because you're hyper focused on, okay, well, we got the 13 or we got the 48. And by virtue of doing that, especially, when in the way we do this, by virtue of doing that, what we find ourselves doing is we find ourselves living in the candle way too often. Okay. Now, here's the deal. Me personally, if, if, because now I got your attention here with these yellow lines, right? If GT is red, my cloud is red, and my band is red, what's happening? We have the bigger trend, which is the GT. We have the middle trend, which would be like the 1348 cross. And then we have the short-term trend, which is your band. That's all this needs to be. Going down. And so therefore, all bits of information, all other bits of information mean nothing. It means nothing. Okay. And let's talk about this, right? So let's say it means nothing. Let's say, right, we're trying to get something leveled on a wall. You guys want to hang up pictures on a wall. You want it perfectly leveled, right? What's the best way to level it? With a 2-inch ruler or maybe an 8-inch ruler? What's the best way to level it? You're going to see the line much better if the points are further apart. So that's why we say let's focus on the trend, because when we are focused on a candle, we're this narrow. We get it further apart, we understand the trend. And we have more confidence in what we're doing. The longer ruler always wins. So what we're giving you guys here is like, hey, this is your 8-inch ruler your GT 500 is going to be your 12-inch ruler, then your 8-inch ruler. And then, you got your 6-inch ruler here, right? And then price action's just simply little peckers. You're not getting much action with little peckers, are you? Okay. So we have to focus on the bigger pecker. So in what we're doing here, we're using the 1348, and this is when we first brought it to market with 1348. The whole idea behind 1348 was the actionable moment. Now, when you use a pecker, like, oh, we broke the 13, when you use that little pecker who broke the 13, when you do that, you're simply trying to hang a picture with a little torch ruler. So then that's when you started hearing me say, guys, wait for the cross. The cross is the actionable moment. Right. Wait for the price action to get away from the EMAs. You guys remember that, right? You understand this now? Who's making sense of this now? This is why we trade away from the EMAs, because if we trade away from the EMAs, we're allowing the ruler to be that 10-incher. Okay? All right. So then we went ahead. And we said, okay, well, these guys here are just not listening. Like, what's going on? They're listening to what's going on. And then, okay, so I'm going to be honest with you guys. I shared this with Hot Potato. One of my biggest issues teaching this out, because it was very, very, very difficult to teach this out for whatever reason it was I started feeling like I had imposter syndrome. Not that I wasn't an amazing trainer, because I am, like, just, but I'm like, damn, am I a fucking horrible teacher? And there was so much doubt on myself. The imposter syndrome is very, very real. I mean, even yesterday, even though I gave you guys the fucking keys to the kingdom, I'm sitting there on the chart, like, how do I make this better? Of- to my relief, and sadly, but to my relief, I can't. Okay. So we were going through different iterations of 30/40, and we said, here's an indicator to solve this problem. Here's an indicator to solve that problem. And what I love about where we are right now is that we've consolidated a lot of things where you guys are not paying attention. But we said, okay, well, if you're going to live on a 5 minute, then we need to look at the 30 minute. And this still holds true, guys. You have my chart now. Let's do this. So if we have a 10-inch ruler, 8-inch ruler, 6-inch ruler, and then just a bunch of little, you know, noise, basically. When for those who have the chart, this is the importance of the 30 minute, because then this becomes your yard. This is your yard. That's what that is, right? This is your yard. Now, we could go ahead and match the cursor to price action. And in doing so, even here, we could see that at or about here, right there on that 30 minute, we zoom on in here, right there is where things started changing. Right here, right there. So now this brings up something. Your feelings and what you're experiencing, is that because the trend is changing on you all the fucking time? Or is it because the candle is provoking you? Is the candle provoking you, or is the trend okay? The candle is provoking. Correct. So now let's take it a step further. Then, in order to solve the problem for the candle provoking you, we say, walk away. Set your stop, set your target, and walk away. Right? That was the solution I came up with. I was like, you guys need to just learn to walk away. Yeah, how many of you actually walked away? None of you. None. Yeah, motherfuckers are watching the chart more than you ever watched your fucking kids. Goddamn. Seriously, right? you, your poor son walking around like this because you stuck his finger in a socket. It was fucking poor parenting. We out here like just hawking the charts. Like, come on, man, make this make sense. Doesn't make sense. We don't need to watch the chart. You're not Professor X, and you guys have heard me say this, right? Over and over and over. You're not fucking Professor X. You're not going to make the candles move. Walk it off, rub one out, spend some time with the lady, go out, plant a flower bed, do something. but let the trade develop, right? Because the trend, by example here, shifted only once. That's it. On the 5 minute, the trend shifted only once. Okay. So, oh my God, candle. Oh no, bro, man, it just shifted once from bearish to bullish. That's all it did. Okay. So, so there you go. Now, then you got the hybrid approach, which Erwin just brought up. We'll get to that a little later. All right. So, we use time um, as an order of confluence. It's a larger time frame telling you, hey, this is what's up, right? And, you know, what was happening was, and I found this ironic, was that people were more focused on finding something that will allow them to hold longer, which is part of the game here, right? Because we got to believe in the trend. And obviously, believing in the trend will naturally allow you to hold longer. But they were doing everything other than submitting to the trend, which was kind of annoying and weird. But the true fact in this is that you don't need to hold past point 0.5. And that is the honest God truth. Why? 0.5 compounded with another 0.5 is greater than 1. That's simple. Okay. So let's go ahead and talk about the confluence stack. Okay. So we got the RSI, we have the MACD, and then we replaced RSI MACD with the VWAP Z score, right? GG500. And then there was ChopX. So what we ended up doing was essentially ChopX got consolidated with GG500, right? And then the VWAP Z score sort of kind of made this obsolete here, right? The RSI and MACD. And so let's go back to the chart here. Let's see what this looks like. Let's see what this looks like. Okay. So we're in a trade. And what I want you guys to do when you read these trades, right? When you're looking at it, let's zoom on in here, right? This is far more powerful than RSI, right? Now, what is GT score doing? GT score is taking a snapshot of price and how much is it deviated from its average price. You see, this middle line here is VWAP. When you cross this line, you've crossed VWAP, right? And, for you contrarians, the contrarians, right? It's going to reverse. It's going to reverse when. Now, if we are going to make an assumption about a reversing, it would be when it's deviated 2x from VWAP. You see, the markets are efficient, right? Or at least in the pursuit of efficiency. You can't have runaway prices. You can't. Those who are part of the AMC movement understand this well. You can't have those runaway prices without retracements. You need efficiencies in the market. And that was something that most apes just completely forgot. And because of that, that's the reason why, guys, I'm going to be 100% honest with you. If the apes understood standard deviation, you would be buying rips instead of dips. You would know when to close the position and then front load to push it even higher. But because people were literally there like deer in headlights, you had no momentum to push it up. It was new money that was pushing it up. It was FOMO that was pushing it up. The core of that movement was not pushing it up. What they were doing was they were aggregating and buying the dip. Now, when you think about what buying the dip is, you're telling the algos this is fair price, right? Because there's more buyers as the price is going lower and there's more sellers, right? So what do you think happens? The price goes lower. Okay. So when we look at VWAP here, we say, okay, we know that within reason, price is getting a little expensive within one deviation from VWAP, which is this middle line, up to two deviations of VWAP. Anything outside of that, bro, you're fucking greedy. And if you're gonna hold beyond that, then Jesus Christ, you deserve all that pain. You really do. So, what does this also do? Okay, we stop becoming contrarian traders. You know that the biggest villain to all day traders is the contrarian mindset, right? It's your brain saying, well, this is enough. It's gone down enough. It should reverse here. How many times have you guys been, you know, caught up in a very, very small room with that villain? Let's get some hands, right? So your mind and your logic is like, it has to. And guess what? Guess what? Most of the time, you're not wrong. Most of the time, you're not wrong. But your timing is. And time is the difference between becoming a millionaire and being a has-been. Time. That's all it is. So if you're constantly forcing time, if you front load the time now, you're not going to have time on the back end of it. I promise you. So what the GT score is going to do is keep you from front loading time so that you have time in the markets to manifest what you're attempting to do, make money. Okay. So for those who don't have GT scores, for those who are not in day trades, I would advise that this is something that it's $100 a month, guys. It'll save you so much pain, right? But you could see here, it it does away with RSI because with RSI, oh, it's oversold at 28. It has to. How many times has RSI like fucked you? Let's get some hands. It's overbought. It's oversold. It's time for a reversal. How many times has RSI fucked you? Right? How many times? How many times has the MACD fucked you? Right? Because the MACD is simply the cross of the 12 and 26. So everyone's like, the 12 and 26 is crossing. That means we're bearish. It's an oscillator. At that moment in time, right? What was previously a bullish move, a moment in time in weekends. Doesn't necessarily mean we're now bearish. But the MACD with the RSI, when you go ahead and look at them individually, it tells you, hey, we're bearish, right? The MACD do it. Oh, it crossed out. Oh, shit. All right, I'm going short. And just, like, fuck. All right, okay. So that's why we removed the MACD and we removed the RSI and we looked at just where the institutions lie, right? Institutions are hanging around this point almost always. When you break above this, you're bullish. When you're below this, you're bearish, guys. It is as simple as that. You break above it, institutions are loading up the boat, right? They're pushing, they're waiting for the algos or retail to react to it, then they become exit liquidity. It's just that's just what this is, boys and girls. It's literally all that is. So when you're like, it's gonna reverse, I'm gonna tell you, sit your ass down until you can prove to me and a room of 200 people that it's going to reverse. If it's only going to reverse in your mind, then let me tell you, brother, it's like that is a trade full of bias and it reeks desperation. So let's go back to this, right? What we've done with the confluence stacks is we've consolidated the RSI and the MACD into basically the GT score or the VWAP Z score. We've then consolidated ChopX into the GT 500. So let's talk about the entry or the first retest of the 13 in the trend direction, because there are some people who very early on got this. And there are others who are just like, I don't know what I'm doing. Let me show you something. Let's do this. All right, let's do this. Well, I'm going to, let's see, we're gonna hide trend tracker, we're gonna hide the closer, GT. Yeah, we're gonna hide the confluence checklist. All right, let's just do this. Okay, guys. Okay. Now, we could go ahead and turn on the price right here. There we go. Nice. Okay. Now, what was happening here was, once again, when we were doing the 1348 cross, there was so much emphasis on that 13 and the break of the 13 or the bounce off the 13, aka the rim job. Rim job? Yeah, who remembers that? We're rimming the 13. We're literally on the 13, right? Yep. Okay. So what was happening here was, you know, it was, the price action. Let me go ahead and turn off the band for a second. Just to be rebel, let's see if we get that off there. All right, cool. Okay. So what was happening here was people were waiting for the bounce off of here, right? Now, why were you waiting for the bounce off of the 13? I'm going to tell you why, right? Better pricing. Blue case. You want a retest of the 13 is better pricing, right? Blue case. Really? Better pricing. Okay. Why would it matter? Why would better pricing matter? So what was happening was, what we were trying to do was have precision in this moment here, which is 6.25 bars or 6.25 points, right? Precision in this very moment that you forget that it's just 10% of the move, right? So we were overcomplicating the move for simply 10%, right? Now, if someone says that's a nasty move back to the 13, depends. Now, depends. Guys, that's a that's a $13 move. That's a 13-point move. Now, is that a nasty move for someone who has 10 ES contracts? It's about, yeah, about 5,300 bucks. Pretty fucking wild, right? Uh, if you're oversized, exactly. So I want you guys to really, really think about it, right? We were spending so much time trying to nail 10% of the move in perfection, right? Because we're constantly trading in fear because we know we were oversizing. Too many contracts and it's emotional damage 100%. Okay. So because of that, and because we saw that traders were just so focused on the precision entry as opposed to the trend, then guys, we came up with the ribbon. Okay. Now, the ribbon is basically going to tell you, okay? The ribbon is going to tell you when that trade in that moment in time, right? Let's zoom in here. The break of that ribbon, yield, caution, right? Here we go. We break the ribbon. Once again, we have a continuation, right? So instead of aiming for perfection and maybe having to deal with emotional duress because it went to the bottom of the cloud here, what if we just respected the band and said, okay, well, the candle broke the band. Let me just wait. Who finds more value in that? Right? Because your mental capital is just as valuable as your portfolio, right? Because now you know that you can use GT in confluence of 1348 in confluence of the band. The band is going to warn you first, right? Now, remember this though, the band is still the smaller ruler. So if it readjusts itself with the larger time frames, oh my God, what are we going to do? Are we going to trust the candle, this garbage ass candle? Are we going to trust our trend? We make this super easy. And when in doubt, you zoom out, baby. This, this is this. This is this. This is this. Now, want you to like validate time frames like a group of people. So the 1 minute, just basically one person telling you. The 5 minute, maybe five people. But if the 30 minute, we got 30 people telling you, bro, sky's blue. Who are you more likely to believe? way more likely to believe who will calm me down, right? So yeah. And you know what? This is how we live life, right? This is how we live life. You know, we go to a doctor, doctor's like, you got 6 months to live. You go to another doctor, he's like, you were misdiagnosed, right? Now you got to go to another doctor because, like, what one says I'm done, the other one says I'm not. I need more proof. You need more people. The 30-minute is more people. If you are going to say you are going to base your living and dying on one fucking candle, please excuse yourself from this game. Please excuse yourself from this game. Okay. All right. So please. Oh my God. All right. So we have we understand that, playing the 13 retest will get you the better entry, but if you're using the confluences, the 13, the band and GT, and then of course the 30-minute in confluence, you're not so much worried about a retest, right? Right. I would rather just, I mean, this is something that I tell Hot Potato and I tell anybody who's doing anything in life, right? Done is better than perfect. So get into the trade, right? By trying to make the trade perfect, you're missing out on the move and you're missing out on opportunity, and you will always prevent yourself from receiving your blessings because you're fucking overcomplicating it for yourself. Like you're forfeiting 70% moves for a 10% entry. The trade-off there just does not make sense. Okay. Who's having fun here? Who's having fun here? Okay. So I want you guys to understand what you're looking at. What you're looking at here are trends and moments in time with the trend. And this is far more important than the individual the candle. Now, but we go ahead and say, all right, well, we turn this on, and then let's turn on the GTO to exits. We got where are all my indicators? Oh my God, I get lost sometimes. So it's the flush checklist. We're gonna leave that there. Right there. We're gonna flush checklist. GTO to exits. All right, cool. Now, now, we're taking it a step further, right? Because we want you guys in the trend. We want you guys in the trend. That's all we want you guys in. We just want you in the trend, not the candle. So we colorize the candles, right? So that these red candles, right? If you were going to live in candles, at least you would feel a little more comfort that the colors weren't changing on you all the time, right? Now, Ruben, you're gonna have to rewind and rewatch this if you missed when Gigi scores yellow, right? This here was designed to have you submit to the band. We don't want you like, oh my God, this red is great. Oh man, it's freaking Jesus. It's like having ADHD, right? It's like, oh no. We said, hey, look, trust the system It's green. Your band is green. Sure. 1348 is green, right? And then, yo, come on, right? It's like, okay, so this is telling you, right here, this right here, right? It's telling you, like, hey, look it. If you, if you, right, don't like chop because the trend did shift, but there's still some chop, right? If you don't wanna fuck around and find out, no, this is the fuck around and find out zone, right? You're just like, "Yo, let me chill a second." And then, boom, right here. Green, 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 green. All I see is green. All I see is green. Let me know if you see fucking purple here, guys, because all I see is green. But then, of course, you got the 30 minute. The 30 minute is also green. The yellow is a signal of chop, right? Hold on. Is there opportunity here? Yes. Okay. Let's make this very, very, very clear. In the yellow moments, it's chop, and usually it's chop inside of a trend, right? Because if we go to the 30 minute, we don't see that. We see that it's trending, but it's chop inside of a trend. Now, I need you guys to understand something, right? That if you are trying to maximize your holding in a trade, just go ahead, buy the S&P and come back in 10 years. It's fucking dumb, the amount of emphasis on holding longer. I'm gonna show you how dumb that is in a second. We'll get into that. Let me show you how dumb that really is. It's fucking dumb. It is dumb, right? Watch. We'll get to that. Okay, we've been at this. Wow, first hour. This was fast. Okay, so when it was green, when it turned green, it is outside of one, right? So here's the deal. Here is the deal, right? The origin of the trade, you want it to be. This is the origin of the trade. A 1348 trade. You got a thumbs up here. The origin of the trade needs to be within the one because that is the start of the trend. That's why we mark it. Trade design down, that is the start of that trend. Trade design up, it's saying no go. Let's zoom on in, right? At that moment, the actionable moment, which is the trade design, is saying no go, but we get a 1348 cross that says go. So that is the start of the trend. And what you're doing is you're playing the continuation. And yes, this here, and let's go back to this for a second, right? It's not RSI. It's not overbought just yet. It's still green. So if you had other confluences, your 1348, your band, right? Your color candles, and your 30 minute, you're good to go. Hold on. Well, let's curb expectations a little bit, right? Because this is where this whole idea of I gotta hold longer is just like dumb. It's dumb. All right. Anyways, you guys follow that? You guys understand what we're doing here? Right? You want the origins of the trade because that lets you know that there is a change in trend. Okay? Make sense, guys? Or did I just lose the crowd? All right, makes sense. Good. All right, good. Okay, good. So, structure creates clarity, right? And clarity creates discipline. What does that mean, right? So that's why we color coded the system, guys. We color coded the system because there's nothing clearer than green, 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 red, red, red. There's nothing clearer than that, right? And out there say this, right? That's clearer than that fuzzy little thought in your head. It will always be clearer than the fuzzy little thought in your head. Clarity equals discipline. The fuzzy little thought in your head will never trump clarity. If it looks like a dude, it is probably a dude, right? Lip fillers, nice, boobs, fat ass, thick legs, yum yum, right? The minute you see the elephant nose in the front, there is no discussion there. That's a fucking man. That's all the clarity you need, right? Or you gotta make an exception. Are you gotta make an exception? Yeah. No, no one's making an exception. No, no exceptions. The clarity is here. No exceptions, right? Hey, Vince, this is not a Q and A, bro. Like, like you're overcomplicating this. Guys, Vince, I'm sorry, man, but it's in you are you're a staple in the community, and I love you for that. But you're fucking overthinking. You're overthinking it. We just said, bro, green is green, right? And my man over here just said, but what if she's got one testicle? He was like, but what if she's just got one testicle? Is she really not a man? You're overthinking the trade when we just literally overcomplicate things. We just legit just told you green is green and green is green, right? And it's like, well, what, what? No, no, right? Clarity equals discipline right here, right? Everything else is like semantics, pretty much, right? Yeah, red is red, green is green. That's woo. Okay. So this is module number one. Let's look at module number two. Module number two here. And this is here. Execution, timing, stops, and scaling. Right? We're gonna get into this in the second hour. We're gonna go ahead and take a break for now. You get up, drink some coffee, look at your notes, you know, remind everybody in Market Talk that they just really missed a fucking gem here. We're going to come back. We're going to do hour number two. So about 15 minutes, folks. We'll see you. Yay. How's everybody doing? And we're back. We are back. Dum, da, dum. Oh, okay. Uh, Everybody back for hour two? We're ready for hour two? Round two. Now, round two is going to require me to use ChatGPT for a second. Okay. Um, because it's good for quick math. And you guys will be able just, see for yourself. Like there's no BS in this. Let's see here. That's our chat. My settings wise, yes, I want dark mode. Option color black and appearance system dark. Default. Okay. All right. All right, guys. So let's talk about this. Yeah, I do. There you go. I wear glasses. I wear glasses when I'm on my bike and when I'm driving. Now, if I wear glasses or looking at the screen, my eyes end up hurting. Oh, they hurt so much. Anyways, you guys ready? Hour two? Right? Yes, we're ready? Okay. All right. How many of you go for a one-to-one to get your one-to-one and you're done? I know a lot of you do that. A one-to-one and you're done. Yeah? Hmm. Okay. Okay. And hey, one-to-one and done. Cool. 1% daily, right? But everybody's trying to do it one and done, right? And what if that's really just a really dumb expectation? What if that's really a dumb expectation? I know. So I was like, hey, what the fuck are you talking about, dude? You're telling me I need a compound 1% a day, right? Hmm. So we're risking 1%. Uh huh. Hmm. All right. So let's talk about this. Yeah. Anyway, it's like, what the fuck you talking about, right? So we got HR based stops, right? We're going to talk about this. We're going to talk about the risk, 1%, partial exits, we all that stuff, right? And so guys, take a screenshot of this, right? This looks really, really, really complicated, but it's just really, really, really simple. Let me, let me just summarize this, right? That precision beats aggression every single time. This is so important. Precision beats aggression. Right. So let's talk about what aggression is and where it might come from. So aggression might come from frustration. Aggression might come from a bias, being overconfident. Aggression might be coming from your shitty life, right? That is just true. If your life is fucked up, your trade is going to be fucked up. This is just facts. We got Doug in here, right? He's the most stubborn fucking student I've ever met in my life. Sorry, Doug, it's just true. You're fucking stubborn, bro. You're a guy that as a man, I'll break up, dude. I'll have a beer with you, I'll chill with you, I'll do all that stuff. As a fucking student, I can't stand you, right? And hopefully that pays dividends in your life because it's going to make you a better trader, right? So There we go. Right, talk about like what are we aiming to do, especially when you guys join Trade 1348, right? It's like, damn, okay, well, I'm paying this guy with a fucking Yankee hat, right? Upwards of $269. This has got to work. That's bias number one, right? This is before you even make a fucking trade, it's like I gotta trust this dude. I gotta trust that there's other people who trust this dude, right? I gotta trust that there's other people who are successful with this dude. Right? You're coming in like, I gotta trust this dude. And that right there creates a great deal of pressure. Now, here's the deal, right? Here's the deal. Because of that, you want to believe that you're doing right. You want to believe that you're getting the system, right? So because you're trying to believe that you're getting the system, you end up shortchanging what the system is really telling you to do simply to validate the cost of $269 a month. Guys, this is the honest fucking truth. So we're not going to sugarcoat this, right? You're shortchanging yourself because you want to justify what you're paying me. And of course, got family members looking at you like a fucking crazy. You got family members that tell you, like, really, what? You don't have a great support group unless you come here to the community. This is just facts. This is facts. It's just, we're not lying here. Okay. So then when I tell you, hey, like 1% compounded in the moment, 1%, you're like, wait a second. Well, the fucking 1%, right? So that $50 from my port, you're charging me $269. That's a whole week of trading if I'm trading micros to cover this system. Not to mention, I'm not following the rules, so I'm going to be fucking up, and I'm trading for $33 instead of $50 or 1%. Right now, $269 is hella value, but when we start itemizing it and we start saying, okay, well, this versus this, right? Initially, it doesn't add up. And I don't blame you. I don't fucking blame you, right? Because, you know, because of that, that's where aggression starts coming, right? And then, oh my God, right? So then we couple that with a fucking prop firm. What are we doing here? So I'm going to show you where we can take this thing and turn it on its head. You guys ready? Who's ready? Who's ready? Who's ready? Ready. Okay. So okay, watch this. We're going to do this. First, okay. Let's establish the probability of winning a trade 0.3 to 1, 0.5 to 1, and 1 to 1. All right, we're going to zoom on in here. So we're going to establish probability, right? So let's get it here so you guys can see this. Right there, right? So what we see clearly is you must win 77% not to lose money if you're hitting 0.3. But we go 0.5, 2 wins out of 3 break even. 2 wins out of 3 break even. Well, right? A 1 to 1 equal wins, loss frequency breaks even. So it's a 50-50%, right? So at 0.5, you need to win 66% of the time. but 0.5 wins about 85% of the time. Or if we go ahead and we use recent empirical data from our bots, about 81%. So we get this back up here so you guys can see, right? If your risk to reward is 0.5 and your win rate's 81%, the expectancy per trade is going to be 0.21% per trade. That was your expectancy, right? So the statistical edge on here is roughly a 21% return per 100 trades with 1% risk. So what if we started with a 10K account, traded 6 trades a day for 252 trading days, targeting 0.5 per trade. There you go. It's 6 trades per day. You turn your $10,000 into $252,000. This is actually more than compounding 1% a day with one trade. But if I'm giving you a higher probability of winning because you're only going to 0.5, and we're talking about 6 trades, guys, let's really think about what 6 trades is. 6 trades is basically an MES or an ES and an NQ 3 times a day each. Those are 6 trades. Now, the reason why we're saying we're risking 1% is so that our sizing remains equal, no matter if it's ES or NQ. Who's following this? Who is following this? So far? So good? Right? So when we get caught up in the whole, I need to hold longer, yeah, I would dare say you're highly inefficient because we just proved that holding shorter with a higher win probability makes you more money than holding longer. One to one, you get to like, 50%, right? Let's take it a step further, right? Let's take it a step further. And the reason why this is happening is because you're letting yourself, let's do this. 1 second, right? We go back to the charts. Let's do this. Can we find a 0.5 here? Oh, yes, we can. Yes, we can. Can we find a 0.5 in here somewhere? Oh, yes, we can. Can we find a 0.5 here? Oh, yes, we can. 1, 2, 3. 1, 2, 3. The count. Sesame Street. Come on. If we submit it just to the system, can we find the 0.5s here? Can we? Or am I some delusion trader? Like those other cats on YouTube? Delusion traders, delusional, right? Can we spot 0.5 moves in there? Yes, all day. We could do that all day. Whoop. So If we get you 6 trades, you're obviously compounding, and you're winning 81%, so that means you're right. So, Doug, stay with me. So, Doug, again, this is why I can't stand you as a student, because point 5 is where strategically and mathematically is where all you need to be. That's where you need to be, right? So, what does this mean? Hold on. Wait a second. Does this mean that we try to get a point 5? Nope. It means we set a price alert at point 0.5. We break the point 0.5. If it's somewhere at point 0.7, bring your stop up. You're still targeting a 1.5. You're still targeting a 1.5. Okay, so now this isn't going to do you any good unless you 100%, guys, unless you 100 fucking percent. So the other is a 1.5 target, but you're setting the price alert to 1.5, or you're watching the trade till you get to the 0.5 or 0.75, bring your stop down, or all right, do I have everybody committed to the trend right now? Everybody, are you committed to the trend? Who's committed to the trend? Everybody's committed to the trend? Are you sure? Are you sure? Right? No candles. No candles. You sure? Okay, let's do this. Let's set this up really quick. You guys ready? Okay, check this out. And we know that the average ATR and ES on the 5 minutes is going to be about like 4 to 9 points. This is 26 points. This is essentially a 2 to 1 on the 1 minute. You want to all but guarantee your 0.5. You have it here on the 1 minute. It's here on the 1. Now, how foolish do we look like we're trying to hold the whole goddamn trend? See, what many of you guys do not realize, remember when we were doing the leap? You know the leap contest, how I got up to number 1? Who remembers that? Who remembers that? Right? You remember that, right? The way I was doing that was I was compounding my point 0.5s, and I was doing it in rapid succession, compounding my point 0.5s. Go, go, go. Well, I keep in mind, guys, I had a late start. There were people who had hours on me. They had a late start. And by the end of day 1, maybe day 1.5, I was already number 1. I was like, all right, I proved my point. We're done. And it was because I was on the 1 minute, making sure that the 1 minute aligned. So, right. We keep, right? So what ends up happening is that we get back to this, right? We keep our risk exactly the same, right? But the distance to the stop loss changes. So if guys, If we're keeping our risk the same, but on different time frames, the risk to the stop loss changes or the distance because of the time frame. Should we really be setting a hard stop? No. See, the hard stop is there to protect your ego. The hard stop is to protect you from aggression. That's basically what it is. Institutions don't use hard stops. They don't, guys. Fucking money manager calls you like, yo, we lost 30% of your account because they hit our stop with a fucking wick. Sorry, John. Guess little Billy isn't going to Harvard. You're gonna have to send him to community college, and yeah, he's gonna be some fucking nail tech. Anyways, great. So this is the thing, right? This will start happening with stops when we start getting cute with our stops and tightening the stops, and we end up getting caught. Where should our stops be? Right. So we understand that we gotta keep our daily risk at or about 1%, and we stack R multiples instead of lot size. This 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 is important. This is important because, right, we know on the 5 minute and on the 30 we had those pivots, right? We're looking at the one we can see where it pivots, right? Here, trade. Here, that's a trade. Here, that's a trade. 3 trades. Maybe here, that's a trade. There's 4 trades. You get 4 trades. And guys, 47 points. 47 points. Hold on now. Hold on now. Right? That's 47 points. That's, oh my God, the whole 47 points with the ES. I make $2,000. Right? And that is where the fantasy of holding comes from. It's the idea of if I hold longer, I make more money, right? So you're focused on making more money or extracting as much value from that trade as possible, as opposed to compounding the trade. The priority is compounding the trade, not extracting as much as possible. Now, if this trade gave you 47 points, 52 points, let's just say, right? And we know that the ATR, let me get this for you. I'm going to simply just get the ATR calculator really quick. Okay. All right. So we're going to do the average true range really quick. And so here in this moment in time, the ATR, I don't know if you guys can see it here, but at this moment in time, you guys can just put it on your chart right now and take a look at this. This moment in time, the ATR is 3.35 points. The move is 52. Anybody know where I'm getting with this? So surely we can hold for the 52 and maximize the trade. But I can damn near guarantee you that you're going to hit your 0.5. We're 0.1 for that matter. We're 1 to 1. So let's remove the obsession of holding longer and let's get back to the obsession of compounding the dollar amount, because We need to guarantee compounding. We don't need to guarantee dollar amounts. We need to guarantee compounding. Let me be candid with you. It's the system with the bot. Now the bot starts with a $50,000 port. It's 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 averaging $4,000 a day. Compounding the 1 minute. So Scott, it's not necessarily protect your 3 points. It's protect your point five. So guys, the bot's making. How much data are you? He's there somewhere, right? The bot is making 3 to 4,000 a day, compounding point five wins. Okay. So danger merchant. This is the 1 minute is simply highlighting, right? The 1 minute is highlighting what you can do on the five, right? It's lending itself to the confidence. Now, if you we use the 1 minute for precision, and that's going to be the next module. 6% yesterday from compounding the wins. Guys, that was the bot. It was using trade designs and it was looking for confluences and it was stacking point fives to a grand total of 7% yesterday. The bot didn't care. I mean, bot didn't care about holding longer. As most as most algorithms in the market don't care about holding longer. The only people who care about holding longer is retail. That's it. And the longer your money's in the market, the more at risk you are. Right. That's why you have, you know, algos and high frequency traders and all those guys. And you're like, man, only a point five. And the thing is, you guys can do that too. You can do it too. Now, how will we do this? Let's do it this way. Okay. Let's do it this way. Because when you are using two time frames, you want a 4 to 6x. That's why the 5 and the 30 worked really, really well. It's a 4 to 6x. That's why the 1 and a 5 works really well. It's a 4 to 6x. Those of you who are going 4-hour daily, you're doing too much. 100% you're doing too much. Remember, let's assume that the 5 minutes your 2-inch ruler, right? If we 5x it, now we got a 10-inch ruler. We are able to see the trend on the 30 minute. The same thing applies on the 1 minute. We keep our risk at 1%, right? We keep our risk at 1%, and what we're getting here is our little 2-inch snapshots. Let's change this to the 5. And let's see if this makes sense. Right? Is this 1 minute window within this 5 minute window? Do we have confluence? Do we have enough to make 0.5? Do we have enough to make 0.5 here? Is it confluence with this window? Yes. Okay. Let's take it a step further. This window. Now this window here, right? Right here. This window. Right here. It's a little interesting because your window's tight. Your window's super tight. Right here to right here. Let's go ahead and measure this. Right. You see this window right here to about right here? Let's go ahead. We're going to measure that. So to about right here on the window. Let's zoom on in. Right. You guys see that there? That's still 39 points. This was enough points to be in confluence in the zone here. Making sense? Making sense? Sure hope so. By virtue of going to the 1 minute and using the 1 minute to get you the laser precision entries obligates you to taking your profits faster, but forces you to truly layer up your levels of confluence. So we already know that the 5 was in confluence with the 30. Now we're going to look for the 1 to be in confluence with the 5. And all we need, right, our 1-to-1 is going to be based on a 3.23 ATR. So if we're going ahead and hitting 30 points, that's a 10x. But guys, we don't even need to hit that much. But you know what? Most of you will end up hitting that much, and God bless you. You're well on your way. You're well on your way when we have those layers of confluence. Who's excited? Because the 1 can only make sense if your heart is in the trend. Otherwise, the 1 is going to just make you so fucking nervous. Right? So this is the reason why I had called up Hot Potato and I said, listen, make the bot trade the 1 minute. Great. This is what you do. What's the 30-minute trend? Bearish, cool. What's the 5-minute trend? Does it agree? Cool. What are we doing on the 1 minute? Taking the 1 minute that agrees with the 5 and the 30. We're done there. Make sense? Now, Anthony, he's used a bigger picture now. Now, the reason why I'm sharing this with you guys is because I know a lot of you guys are going to go ahead and do prop firms. I hate it. I hate that you guys do prop firms, but if you're going to do prop firms, do it fucking right and take all their money. All their money. All of their money. Just take it. You don't need to hold the whole trend. You just don't. I didn't become a millionaire because I took $1 million trade here and there. I became a millionaire because I was taking $50 trades here and there. I turned it to $100 trades here and there. Then $1,000 here and there. 5,000 here and there. 20,000. That's how that happened. Right. So, I know everybody's excited about the bots, but yeah, I'm gonna end up hurting some feelings here about the bot. Um, the bot has some very stringent requirements. I'm not just handing it out to anybody. If you guys want to hear the requirements, I'll tell you the requirements right now. You're obligated to introduce and keep within your affiliate program 5 people in trade 1348. That's step 1. If you don't have 5 people underneath you, you lost the first part of it, right? Number 2, right? You're gonna, and this is going to be a graduate scale, but it's we start at 2,000, 3,000. We're capping it at $6,000 a month. I'm gonna get mine, y'all. Right? That there's no socialism. in this fucking community. And I realized that by virtue of creating this bot, that's what I'm doing. I'm not that mayor in New York, right? It's capitalism. It has to be earned. I'm not fucking snaps. So you get 5 people, introduce them to 1348, have them on 1348. You know better to teach them, encourage them, and just show them that they can be successful in 1348. And then the other part of it is you got to pay the man. That's really it, right? So we were releasing the bot, hopefully sometime at or around January. We're running through the paces, but it looks like January is going to be, when people are going to start getting tapped on their shoulders. You're going to be invited. Okay, so knowing what we know now, here, the 1 minute doesn't seem as intimidating anymore, does it, guys? Right? Okay. So, Sebastian, I want to make this clear. You are still using the 5 and the 30 to give you your trend. You're then looking at the 1 for your entries. That was simply the whole point, right? That if you have alignment where it's green here, it's green on the 5 and green on the 30, then you can take that trade. Make sense? Does that make sense? Right? We're trading trends and confluences and trends, right? The 1 minute has one guy telling us, hey, we're going up. The 5 minute has 5 more guys telling us, hey, we're going up. The 30 minute has 30 more guys. You got 36 guys telling you the trend is going up. Take it. Okay. So, we can get caught up in all this, right? We can certainly get caught up in what this is. But, you know, we can show you how like point 0.5 trades. If you were doing 4 on NQ, 4 ES, that's a total of 8 trades. What does 8 trades look like? Right? This is 8 trades, 8 trades of almost guaranteed point 0.5s, right? Adds up to 1.72 in a day. Whereas an actual trade design doesn't guarantee you 1.72 in a day. Who's following? Is it making sense here? Right? Does that make sense? So you're sitting there, it's like you're like, okay, I'm targeting a 1 to 1, a 1.5 to 1. It's like, okay, yeah, that's probably not as guaranteed as taking 8 trades a day, winning 81% of them, and then compounding 1.72% a day. And exactly, Jesse. It doesn't matter if the 1 minute has more action. You're still looking for 1 minute agrees with the 5 and the 5 agrees with the 30. You have a chain of command there. You do that, you're making your money. Because remember, the goal is point 0.5 in and out, right? Point 0.5. You get 3.5s in a row. I mean, you're pretty much at like what? What are we compounding there? We're compounding a ridiculous amount with no losses. We're compounding a ridiculous amount, guys. Right? Now, what this does, it turns 10K into $730,000. Okay. So The question is, do we care about trade design signals? Absolutely. Absolutely. Because trade design signals are just that extra level of confirmation. So if there's a trade design signal at 30 and you got your band moving up at the 5, there's a trade design that's signaled on the 5 and it told you you're moving on up. Then you're looking for that confluence on the 1. It still matters, but you're looking for when confluence hits on all 3. It still requires trade designs, guys. So if you're doing 1% compound in a day, you turn 10K into 122,000. But if we're just stacking those point fives and we're ending the day at 1.73, it's 730,000. I hope eyes are opening up right now. I hope we have eyes opening up right now because holding the trade longer is the biggest fallacy in all of trading. So when we go ahead and say I have to hold longer, what are we really doing? We're prolonging our blessing, guys. That's what we're doing, right? Because the guy who's holding long year over year is making 13% compounded. Bro, we're doing that a week. Charles Scott, bingo, guys. You saw what Scott just said? Holding longer is also missing out on the compounding the next 5. Okay. Everybody agrees with Scott, right? Holding longer is also missing out on compounding the next 5. I want hands because that is such a true statement. You agree with Scott, right? We got 1 minute on this one. So here goes the cliffhanger. Then why the fuck do we hold on to losing trades? Now that you know that what the formula is, why the fuck would you hold on to a losing trade? So by virtue of adjusting the mindset, understanding the power of compounding 0.51% on the day, and understanding the value of what that point 0.5 is, you never hold a losing trade because we know how valuable that point 0.5 is now, right? So important. It is so important. Okay. So we didn't really touch on partial exits plus VWAP and reentries, protect green days, but we did. We sure did. Confluences are your reentries. If it's green, you're above VWAP, more than likely. If it's red, you're below VWAP, more than likely. And when we get our extension, if you see it on the old chart, guys, you get our extension down to yellow. It's like, baby, don't touch this. Right? And so now, now, let's get to this other point here. right? Because we're going to wrap this up. You're keeping a daily risk at 1% is very, very, very doable, but you got to keep your risk on the trade at 1%. We end up skewing the math a little bit. Now, here's the other part that you're going to, great. You guys want the truth really quick before we go on a break in the next module? Who wants the truth really quick? Who wants the truth really quick? Oh, man. Nothing is a lie. But here goes the truth. Well, we're gonna bring this up. I love this. I love this. I love this. Let's see here. Where is this? Is ready? You guys ready? Let's take a look at this. If your win rate is 80%, and your average profit loss, what you guys are going to see is that it gets really close. I mean, because this is what the bot's doing at 1.49. Holy fuck, what did I just do? Because we're targeting 0.5, and that typically will average out through standard deviations of average wins and average losses, you can risk up to 4% and have zero chance of blowing up, which means that if you're risking 4%, 0%. Yes, 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 yes. Wait a second. Wait a second. Now, yeah, like we see the faces. Everybody's losing their mind. Hold up. Hold the fuck up now. 1 second here. I just showed you what 1.75 would do for you, and that'll generate you $750,000, and that's compounding 8 trades. But if you went ahead and you had an 81% probability of hitting a 0.5, and you risk 4% on that trade, that 0.5 is 2%. You're welcome. Congratulations, you're done for the day. Did you just get that? Did you just get that? Here we go. There you go. So much for holding longer. The bigger your risk, the less time in the market. The smaller your risk, the more time in the market is inversely related. I'll see you guys in 10 more minutes. Time for some psychology. What's going on, guys? Man, time's going by fast, right? We're on module number 3. Damn. It's been flying, isn't it? Round 3. Let's go. All right. Psychology. Uh-huh. Right? Psychology is the single most important element to training. Guys, you know how they say, like, going to the gym is 10% of it, what you eat is 90% of it? Well, yeah, 90% of this is your psychology, 10% is the system. Okay? Need you to understand that. Okay, so we'll start with greed and fear are data distorters, right? The reason why it's data distorters, well, I think we proved that when we took Trend Tracker and brought it up to GT500. Yeah, it's data distorters, right? So now that we're able to articulate the data properly, is there anything being distorted here? Is there anything being distorted here? It says, are we bearish? Are we bearish? Yes, we are. Distortion, bearish, distortion, bearish, distortion, bullish, distortion, bullish, distortion. These are moments of distortion. Holy hell. So, you have to understand that, yes, greed and fear are absolute distorters. Unfortunately, we reason with greed and fear far more than we reason with the truth, because the truth sometimes is just too fucking hard to swallow. Okay? Too fucking hard to swallow the truth, right? Greed and fear keeps us in fantasy lands. How many of you are thinking about the car you're going to buy your wife or the home you want to provide your family? Really, all the people you want to help once you finally make it. Come on. Yes. Right? Keeps you in la la land. That's great. And we tend to give it a pass because it's noble. Bro, it's fucking great. Noble greed. Okay. Fear. Fear is also, just some la la land, right? Because fear is uncertainty. Fear is unknown. Fear means you're not ready. That's all that fear means. Fear just means you're not ready. And if you're in the market scared, you're not ready. That is your clue, bro, to get to paper trading, because we can't trade in the realm of greed, nor can we trade in the realm of fear. We have to be 100% neutral, and there's no bias to it. And again, feared, all that comes from is lack of reps and lack of understanding. It's very, very similar to, you know, driving really, really fast. There are people who are just like fucking terrified of going over 100 miles an hour. I've done it enough. I find peace going that fast, especially on a motorcycle, which I shouldn't. Is like I shouldn't even be admitting that, but it's I experienced it. There's a calm in that. You have the reps. It's the same thing with trading. You develop the reps to develop the calm. You're not doing reps, guys. You're not doing reps to see how much money you make and to validate yourself as a trader. That's not what the reps are for. That's not what back testing is about. It's not like, oh yeah, this month I made $25,000. The system must work. Oh yeah? Okay. Try that with real money, chump. It doesn't work good, does it? It doesn't, right? It's because when you were practicing seeking the wrong thing, right? You're practicing the wrong thing. What you're supposed to be practicing with paper trading is supposed to practice the reps so you do not have fear when there's real money. So much so, it's like it's I know guys, it's like, oh my god, when I trade with paper, I do so well. When I do real money, I do horrible. And they're validating, how well they're doing based on their P&L, right? Not based on, am I conquering fear elements? Am I developing confidence in the system based on the roles and the layering and the confluences, right? So I don't mind you paper trading, but are you paper trading the right way? That's why I can't stand people who are like, yeah, I traded my real cow from, 9:45 to 11, and now I'm paper trading. So I can see what the system does. It's like, bro, like, what? What? You want to go ahead and paper trade the exact shittiest times. And what you're going to do is you're going to substantiate whether you did good or not on the fact that you ended that session green or red, right? That's why when people go ahead and they start paper trading 50K, I'm like, who is ready to put an into this? Oh, 5, 10K. Fuck you doing? I got on Doug's ass the other day because Doug out there, Doug was like, yo, I made $31,000. I'm like, bro, go fuck yourself. You made $31,000. You were supposed to make $31,000. It was on a paper trade. I just don't bother scheduling a fucking one-on-one with me until you actually submit to the system, Doug. I'll put you on blast. I don't give a fucking rat's ass. But I made 31,000. Yeah, whatever. Good for your ego. Not sustainable. Not sustainable. Exactly. We don't fuck around though. That's the point. We don't fuck around. Anyways, back to this, right? Because you gotta understand that we gotta take this shit seriously, right? Because we're in constant battles with feed, greed and fear. We're in constant battle of that. So we have to make sure that when we're paper trading, the objective is to master that. I realize it's not sustainable. I've never done that with real money. You know what that's like, right? That I would have hit my wife if I wasn't drinking. Let's make this real. So we don't fuck around and do that, right? That was one of the most bullshit excuses that I got from my step grandfather when he would hit my grandmother. Oh, I did it because I was drinking. She would put up with it. It was by the time I was 18. I'm like, yo, I'm gonna beat you like the man you want to be. We do not make excuses. We do not make excuses. It's just we don't. And I take this very seriously. I take this very seriously, guys. So let's get back to this. So we go ahead and we got the morning checklist. Now, what is the morning checklist? The morning checklist is your reflection in the mirror, right? The morning checklist isn't what the market's doing. The morning checklist is what did you do yesterday and are you prepared to do better and learn from it? And that's what you do every morning. It's a check. It's a contract to yourself, right? This is why, guys, people who use journals, whether it's Trade Zella or you're using the journal I gave Trade 1348 um, in our walk, right? People who use journals improve their win rate by 10 to 15%. This is facts. This is facts. Because now you have something that's tangible, something that's black and white, something that doesn't justify why you beat your mom when you're drunk or you beat your wife when you're drunk. Is like, there's no justification in that. But we get to validate why we're winning more or why we're losing. We have to be honest with ourselves. So in the morning, what you want to do is have your morning checklist. Am I ready to be a better trader than I was yesterday? Not, oh, today I'm going to make more money. Am I ready to be a better trader than yesterday? Who's ready to be a better trader on Monday? Okay. That's the contract you make with yourself. Who's ready to be a better trader on Monday? And if you're a better trader now, you want to be a better trader tomorrow and a better trader after that. Listen, guys, I literally I spent the last 3 years on this chart trying to make it better, trying to get through to you guys. Every day is an opportunity to get better. So that's what your morning checklist is based on your performance on your journal. How do you get better? Okay. Then we have the post trade review. This happens after you're done. This happens after you're done trading and uploading your trades to your journal, right? It's the post trade review. Now, all you're going to do after is document your post trades, how you feel, et cetera, et cetera. Walk away from it. Do not overthink it. Do not walk away from it because it's that person you have to face in the morning, right? So you got your morning checklist is constantly staring down the person you were yesterday on your post trade review. Does that make sense? Does that make sense? Right? Do not sit there and try to evaluate your post trade review. Tomorrow, come back to it. Right? This is so important. Guys, it's so important because it allows you to truly be objective with a clear head the very next day. If you truly want to improve, then you're going to be more honest. You're going to be more, you're going to be more honest with yourself when you rate your performance the next morning. Right? So, morning checklist, post trade review, rate your performance in your morning checklist, post trade review, rate your performance in the morning checklist. That's how I want you guys to do this. Okay? You're not going to become better traders unless you become accountable traders, right? You don't become better traders unless you're accountable traders. So now we move on to compare impulsive versus undisciplined trading results. And this is one of the things that tends to get overlooked when we have a green day. gets overlooked. I made $2,000 yesterday, so yeah, I'm dead. I'm a good trader. And that's what all these cocksuckers on YouTube do. Look at me make 30K. Yeah, I made 30K, but how much did you risk to make the 30K? 500K? Come on. Let's be real here. It doesn't make any sense. It doesn't make any sense, right? You have to be able to go ahead and every morning compare, your impulse versus the disciplined trader. Guys, listen up here. How many times, have we seen a market chat over and over? If I just would have listened to the system, you see people say, I do well when I follow the system, right? Right? Follow the system. If you cannot follow the system, then we go ahead and we go back to the morning checklist and we find out what's really wrong. Because, guys, let's be real. This is a game of psychology. If If your house is not in order, your trades will be. If your house is not in order, guys, your trades will be. There will always be a layer of impulse, right? Greed, fear, desperation. There will always be those layers that show its face on the chart in your trade. There's a reason why I say the chart is nothing but a painting of emotions. We talk about this all the time. Let's go to the 5 minute. We could see emotions here, right? Emotions. Market open. Emotions, right? Consolidation, uncertainty, fear, uncertainty, still uncertain, greed, uncertainty, greed, emotions. Now, let me ask you something. How many of you got that crazy friend or that crazy uncle that, like, yeah, you'll spend some time with, but you are never following that motherfucker to a party or going out with him or anything like that because son of a bitch is crazy, right? I don't want to trade with crazy people. That's what this is, right? All the uncertainty, the fear, the greed, this is crazy. This, this here is when cooler minds prevail. Cooler minds prevail. Cooler minds prevail. Crazy motherfuckers here. Why did they go crazy? Because, oh my God, look what just happened. Everyone's scared, right? Oh my God, what just happened? There, no, is it really going up? Is it going to go back up? Please, please tell me it's going to go back up, right? Then it's just like, oh shit, no. No. There's, I'm scared. I don't know what's going to happen. If trading is a self-fulfilling prophecy, do you want your money aligned with the crazies? Market is driven by emotions, right? Do you want your money aligned with the crazies? Nope. And this is why, my friends, when we took the yellow, when we plotted within your line of sight, you started avoiding the crazies and you started winning more and making more money. So this isn't just about mastering yourself. It's also about the company you keep and the company you choose to be part of. And so you have to be able to say no. Learn to say no. It's one of the reasons why I see me on the trade on live streams, and they talk about this on the live streams. I'm looking for reasons not to take the trade. It's called risk management, right? Because we get caught in greed. It's always going to be yes. It's always going to be yes, right? Greed is always going to be yes, right? Fear is always going to be no, right? Or fear, like, yes, I'm scared. But if you learn to say no, look for reasons to disqualify the trade, but more importantly, we create, you submit yourself to a system where you're like, I'm avoiding the crazies, you make more money, right? Look at this. Look at this. Let's talk about this. Fear, right? Emotions, right? Yeah, you know where it's going, guys, right? Because you guys have such an edge here. The crazy step in. The hopefuls. Is it going to go back up? No. Wait, is it going to go back up? No. Go back. No. You see what's happening here, right? This is where uncertainty lies. It's still even here. There was so much uncertainty. Let me move this. There was so much uncertainty here that it literally consolidated so it just died more. You see, it was just telling you, do not hang out with the crazy people. Making more sense now? So, they say doing the same things over and over and expecting different results is the definition of insanity. If you're going to go ahead and constantly hang out with that crowd and think like, that's going to be beneficial to your psychology, uh, nope, nope, and nope, and nope, and nope. Okay? So we're back at a 5 minute. We got Confluence here. We got the 30 minutes saying like, yeah, let's change this up. It's like right here, we'll change this to the 30 minute, right? And right, so right here is beautiful. This is beautiful, right? Let's go ahead and delete this. Right, right here. Look at all that confidence. There's no delusion here. We know the crazy folks stepped in right here. There's no delusion. You then enter that second leg in confidence, right? Because wee, look at this. Oh my God. Look at that. Oh my God. Right? Stay away from the crazies. That's what yellow is. Those are your emotions. Okay. Now, here we go. This is what I want to get to. Discipline equals emotional neutrality and statistical thinking, right? So that's what the chart is now providing. It's forcing you to be disciplined, right? Because you want it to be red, you don't want it to be yellow. And now you have emotional neutrality where we remove greed and fear, right? Because you have an edge. And then you then go ahead, right? And you add statistical thinking, which we are validating right now and saying, okay, well, we get the 0.5, right? When we take these high probability trades, you're just focused on the mission. You're not focused on your emotions. Mm-mm. No, you're not. You're focused on the mission, right? Like any other business, right? Business's mission is to make money. And the way it makes money is by being predatory on your emotions. So, as a trader, you have to be predatory on their emotions. You have the edge. You are predatory now. You know where there's the fear and where they're irrational. And you're predatory. Why? Because, oh, it's red, full confluence. I'm pouncing, baby. We're pouncing. Well, everybody's like, well, how'd you know? Right? Because they're too busy feeling and thinking. But how'd you know? You know what? I love what the governor of Florida said, right? And how Florida's so great is because he has the absolute cheat code. And the cheat code is he just does the opposite of what New York and Illinois and California are doing. You guys have that cheat code as well because while everyone's being irrational, you're sitting on your hands and you know exactly when to pounce. Anybody want to argue? Anybody want to argue this? Who wants to argue this? Nobody wants to argue this, right? No arguments. There's no arguments here. Right. Hold on. And it goes without saying, do we all agree when a good trade's a good trade? Do we? Because now we don't only have like the 1 minute and the 5 and the 30 minute in confluence. We have a bunch of other traders who agree when it's a good trade, right? And so what 1348 is, it's basically is a Frankenstein of a whole lot of other theories because the market is a self-fulfilling prophecy. So if you can see objectively a good trade, thousands of other traders, for whatever reason, will also see that it's a good trade. It's whoever has the bigger pictures, the one who makes the most money. Try making money without seeing the levels. Who has the bigger picture? You're in agreement with everybody else. Everybody agrees, right? We're going with the trends, but if you don't see the level, you don't have the big picture, right? So just know that when you see those reds and those confluences, you're aligned with a lot of other strategies out there, and you're part of the self-fulfilling prophecy. Yeah, right? Hot potato is still there? Because what most people don't realize is that the strategy led all roads lead to Rome, guys. The strategy, the 1348, right? It all comes back to VWAP. It all comes back to trading away from EMAs. It all comes back to respecting levels, right? And every strategy literally has supply and demand or levels, really, right? Every strategy is in consideration of VWAP to a certain extent, right? That's why we have the VWAP there. We can see the extension. We can see the retracement, right? How important is VWAP? Does anybody realize how important VWAP is? Anybody realize how important VWAP is? There's one clue as to how important VWAP is. What clue as to how important VWAP is? Who knows that clue? Right. But who it's a compilation of price and money. Bingo insider. VWAP stays the same on all time frames, right? VWAP is the president. The 200 is the vice president because the 200 changes on different time frames. So let's think this through, right? I don't care what price is doing. I don't care what price is doing. Just tell me that the trade's above VWAP. Checks out. Tell me that there's a 1348 cross. If price is above the EMA, so that checks out. Tell me we're above the 200 on that specific time frame. That checks out. I got multiple confluences, yes. What's my larger time frame trend telling me? It's going in that direction. I don't give a fuck about price. Let's go. Let's go. Let's go. Are we going too much? And this is why we have this. So, Doug, you're brand new. I'm gonna help you cut to the chase. VWAP gets more respect than any other line in the fucking world. So, here we go. That's why we have the VWAP number one. Do we have VWAP bias? There's an EMA bias. GT flip. We have the trade design. The STB line is also the STB band. And the 1 hour band, we have the 1 hour STB band. You can use the 1 hour STB band. You can use the half hour STB band. Okay. But when you are trading a mission, so the mission is, how do I get my 1%? How do we going to do that mechanically? Well, the system has to have layers of confluence. We know what it looks like. The trade looks the same every single time. Looks the same, right? You made money here because it all looked the same, right, guys? You made money here because it all looked the same, right? Are we arguing this? We made money here because it all looks the same, right? Are we arguing this? This looks like this, right? This looks like this. There's confluence, which looks like this. Uh-huh. Yes. Yes. Right? Doesn't matter. This looks like a bearish trade. This looks like a bullish trade, right? Looks the same. Wait. Does this look the same? Well, that look the same. It's easier to look at the trend than to look at the candle. Because the candles will always be different. But the trends, right? It's like generalizing a bunch of Puerto Ricans. We got every skin color, eye color, hair color out there, right? When you generalize us, we brown motherfuckers. That's what we are. That's the trend. I'm Spanish in my family. Pale ass skin, jet black hair, green eyes, blonde hair. When you generalize the family and you put us all together, we're mostly brown. Okay. So what we're looking for are generalizations. We're not looking for, a sample, but we're looking for the trend. We're looking for that generalization, not the sample. The sample is that candle. Okay. So when we go ahead and guys, this is what proper back testing does, right? Does this check out? Yep. Does this? No, this is where the crazies are. Does this check out? Yep. Wait a second, right? Now, you might be a little late to this party, right? Just maybe. Maybe you're a little bit late to this party. But on the one, you're not. So what we're going to do is we're going to, remember, we talked about like the 5 in alignment with the 30-minute. We used the 1 for the laser precision entry. That way we make sure we're not late to that party. We get that laser precision entry so we could get the 0.5 to get the fuck out. Right? So if we go ahead and we say, all right, here, we'll turn this, we'll turn this into the 5 here over on this side. Let's go ahead, take a look-see. It's the 5. We're going to turn this into the 1. And let's see if we can get some alignment here. Let's see, where are we? Let's bring this all the way right there. Sorry about this, guys. All right, cool. Now let's take a look here. This right here. Sometimes because of this, and you see that movement down, you feel like, damn, I'm a little bit late. I got to get the best entry. But then when we look at the 1 minute, so I'm just like, no, you're good, bro. Right here. The 1 minute we get the flip and the confluence at about right here on this candle. So the 1 minute's helping you get the precision entry here. Just get the flip right there. You guys see that? Trade design down, flip right here. Wait a minute. I'm getting a flip on the 1 minute. I'm getting a trade design down on the 5. I could just go ahead and enter. I could get 1.5. Now, the advantage that you guys have now is that the trade designs, they print on candle close now, so you know what your risk is at all times. Whether you're on the 1 or you're on the 5, guys, now you're never late to the party. And you can use your 1 to help you in and out. Okay. So, who's having fun here? Who's having fun? Because we have countless examples of this. Right? You will never need another instructional video from me ever again. Because as long as you subscribe to right. And you know why? You know why people don't stay consistent on the 5? Because the moves are just too big for their emotions. There wasn't enough reps on a practice. The moves are just too big, right? You're just staring it down like, oh my God, I'm doing $50, $60. Oh my God, I can't. Oh my God, I know. What am I going to do? Right? So, yeah. The 1 is going to let you set your wrist a little bit tighter so you feel a little more confident with that. But it's still, the 1 is your entry into the 5. Your 5 is your entry into the 30. Your 30 is your entry into the 4 hour. Your 4 hour is your entry into the daily. Your daily is your entry into the week. Your week's your entry into the year. Your the, each time frame has an entry into the other, right? That's why we use the 4 to 6 multiplier. The 1 can enter the 5, the 5 can enter the 30 can enter the 4, the 4 can enter the daily. Make sense? Make sense? Oh man. Okay, good. Good, 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 good. Woo! My God, it's 1 o'clock and I still got my place. Okay. Awesome, awesome, awesome. Now, it goes without saying, right? I'm looking here because I see there and I see the comments there. But let me show you guys something, right? So, right, you got the office indicator. Now, all the office is going to do is remind you why you're here. Oh, we broke VLOP. Cool. Now you know why you're here. Boom. That's all this is, man. Why are you here? Oh, below VWAP, below 200 GT flip, everything's a confluence. That's why you're here. You don't need it on the whole time, right? Because this is what ends up happening, right? That's what ends up happening. Because those lines, when you see them on a chart, right, is just like, oh yeah, like, maybe I could take this in the chain. Maybe I take the VO 200. Maybe I'll take it after the break up while. Maybe I'll take it after. And we knew that that was going on, right? And should I do it, right? But I'm a very disciplined trader. I do it, but when we take away the lines, and we just say, "Hey, here's green, here's red." There's nothing to articulate, right? Yeah, right? Let's go ahead and take a look here, right? I'm putting in the best possible moments here, right? Sure, you want to make all that money and hold all that trend, right? But this is the high quality setup. This is the high quality setup, right? And so what we do is we remove the lines to remove the temptation. That's why so many of you are doing really, really well with the super clean charts. We don't, they become like watching the candles. Exactly. Right. They become a point on the chart where you feel like they should mean something. Right? Then they become part of the I noticed crowd, right? And oh man, that was the other thing that Hot Potato and I had to like figure out is how do we shut your ass up with the whole I notice? It's like, bro, you got 3 weeks of fucking trading. Somehow you're the chosen one. Sit your ass down, man. Seriously. Right? So let's not do that. We don't need to do that. Red, green. It will always look the same. Always look the same. My God. Right. So again, discipline equals emotional neutrality and statistical thinking. And you will submit to your red zones and your green zones when, you know, this becomes your equation, right? Your discipline determines your paycheck. Now, how long you hold? Oh, hold. How long? Till I make money. How much? I don't know. I'm holding. So then you leave everything to chance. Like, no, man. Right? No, no. Listen, the over, you know what I mean? I go to the bar. Yeah, there's like the hot, spicy Latino over there, right? I want to know my probability of getting my dick wet that night. If it's a no-go, I'm figuring it out in 15 minutes. You're not wasting my time. You're not wasting my money. You're not wasting my conversation. It's just not happening. Okay. I was disciplined to my objective, which was to put somebody on their back. And that was just the truth. I'm such a changed man. Thank God. Um, you know, everything's still the right color. But everything that I did, it was just like, where's my edge? And you lose your edge when you become complacent, right? It's just with everything in life. You lose your edge when you become complacent. Anthony, exactly. Cut your losses early so you can win faster because it's a numbers game, baby. Oh man. So your discipline determines your paycheck. Your discipline determines your outcome, right? It will always look the same. It will always look the same, right? How do I know? When I have a conversation with a woman or had a conversation with a woman and she's like, yeah, I want to go back to school for nursing. You know what that screams? Single mother. Bye. Why aren't you back at school? Because you're too busy being a single mother. I swear to God. It's just so true, right? It was just these are questions that were set up so I can know this, so I can know where this was going, right? Recently divorced, emotional damage, maybe, spiteful of her previous life, and now just became a fucking whore and a porn star. Let's talk. Anyways, your discipline determines your paycheck. You have to know, you know, what you're doing and why you're doing it every single time. And you never become complacent, ever become complacent. Okay. So the next chapter is going to be we're going to journal every entry. We're going to take a look at this. We're going to look at the one to, we sort of kind of like dabbled this on this. So we're going to end up doing a recap, right? Um, and yeah, we're also going to start a 10-day challenge. Okay. And we're going to do that. And over the next hour, time for our next break. Yeah, time has been flying. But yeah, I hope you guys you walk away from this like, yeah, boy, I'm ready. I'm ready for Monday. Become killers, man. You gotta become killers. All right. Um, another break. See you in about 10 minutes. All right, guys. How we doing? We good, guys? All's good? All's good? Been a replay, trading long chart, the 5 minute. I think I understand it. How did you flip on the 1 minute, and then a trade design on the five. Took the trade, and it was an easy fast 0.5. Is it that simple? Yeah. Yeah, it really is. I mean, that's why our bond is winning like 81%, 81, 82 on average. It falls right along the. Okay. All right. So I got a trick here. We were talking about hedging. Okay. So what we talked about was hedging in different instruments. Today, there's going to be a little different. So you guys remember, right? When I was teaching you guys the hedging using different instruments, so it was like ES and then it's point 0.7 and Qs, right? Right. So we can actually hedge timeframes. There's a different strategy. This is what I'm going to leave you all with. Do whatever the fuck you want to do with it. Right? You guys cool with this? Who's cool? You cool? Okay. So we're not going to be hedging. What we're going to do is we're going to increase your win rate significantly. Who's down for that? Wait a second. We were talking about 0.5 all day, right? And we got you guys excited about 0.5, did we not? Did we got excited about 0.5? You listening? Right. This, if so far you don't feel like the trade camp's worth it, this is going to make it all worth it for you. Okay. So check this out. We've established that we can trade up to 4% zero risk to Merlin, right? We've established that, correct? Yes? We've established that? We agree? Hands up? All right. I want to see how many mind-blown emojis we're going to have after this. I really want to see how many mind-blown emojis we're going to have after this. Right? Because what I'm going to do is make you a hybrid trader. Let's go. You guys are ready for the mind blown? Right? Make sure you have your mind blow emoji already like set in the chat. Right? Okay. That's what we do. It's very fucking simple. This is dumb. This is just dumb. This is dumb. This is dumb. It is simple. It's simple as dumb. Right? Whatever mind blown emoji you want to do. Okay? All right. So let's do it like this. This is the 5 minute, right? We got ahead in the 5 minute, and we've already established that we can, risk up to 4%, right? Um, but I want you guys to like really think about it like this. Fun. Okay. Let's say you can. Let's say you can. And by the way, this is not going to work with prop firms. So please don't do this with prop firms because they're not going to pay you. Like this strategy is so simple and so potent. The prop firms don't pay you for this. They just won't. Let's turn this to the 30. Okay. Shall we begin? Let's go. On the 30 minute, we can all agree that the 30 minute, with the band, Yeah, that this is a very, very, very powerful signal, right? It gives us the direction, right? We agree on this? I mean, very, very, very powerful signal. Okay. Okay. A band flip, a very powerful signal. I mean, it's like, here, this is 27 points and about an hour and a half. You got more than ample time, but that's going against the trend. But when we're going with the trend, right, is a GG flip, right? We're going with the trend. So you guys see, like this is where you want to be, right? So we agree? We agree? This is what you're gonna do. This is what you're gonna do. Who's got their mind blown emojis like ready? Okay. In respects to ES, I got a 30-minute signal. I got full confluence here. I'm going to buy one ES. Let it go. Then what I'm going to do on the 1 minute is I am going to buy 10 MESs. The 1 minute, we go to MES and then we buy 10 MESs. That's what we do. While the 30-minute is doing its thing, you stay active on the chart with the equivalent on MES, right? And the reason why we're doing MES is because we already got one ES on the 30-minute. We don't want to end up closing that ES accidentally, right? So we go to a different instrument, almost the same contract, right? So the same contract size. So it's 10 MESs. And what we're doing is we're literally hedging the 30-minute, right? Or we are magnifying the power of the 30-minute because we can take 10 MESs here while the one ES is just coasting along down on the 30-minute, right? So for those who have their own funded account, this is the equivalent of having two prop firm accounts, almost like a copy trade, right? We know that the general direction on the 30-minute, right? We just go one contract and we go send it, and that's ES. MES, we go to the 1 minute and just play the moments in time. This guarantees that you get your 1% or more. Guarantees it. Hold on. Hold on. Hold on. Hold on. Right? Hold on. Here we go. Right? Hold on. So the trend is down, right? If the trend is down, then that means this very moment right here is retracement. You get to scalp the retracement, so you're always position neutral because you scalp the retracement. So whereas the retracement, you're leaving money out of the table, you're like, oh my God, I should have took profit because I'm leaving money on the table. You're really not doing anything. You're just letting it go because now you're making up the difference on the 1 minute by going counter trend. Now, this is completely an option, right? It's completely an option. It's an option, right? You can choose to do it. What? You got one sitting there, just going, and you're like, okay, I'll take this, and I'll take this. And then you got two positions. Eventually, you got to take your ES, you take your MES. You're done. You're way above your 1%. Making sense? Right? And what this is also doing is you're not battling that other feeling of, am I getting out too soon? You're not battling that feeling. This is the equivalent of me being a day trader and then having a long port, which I allocate my end of month earnings to my long port to just send it. It's still the equivalent. You're using the larger time frame to just let it go. You're going to go ahead. You're either going to be neutral or you're going to be compounding on the smaller time frame. This takes the stress and the uncertainty away from if you are in fact taking advantage of the move. Sebastian, if you didn't get it, let's rewind. Both are going in the same direction. Yes. So one is like, yeah, that's my trend. I know that's my trend. I have to have faith in the trend. The 1 minute is I'm going to compound that movement on a smaller time frame. But then the one also tells you, like, hey man, you know what? Maybe, it's time for me to get out too. But by the time that happens, the damage to the market's already been done. Now that you guys know, you don't worry that you didn't get the whole move. You're always going to feel satiated, right? No, it's the 30, right? Because guys, the larger the time frame, the more accurate the signal. Remember, let's talk about rulers. Larger rulers help you get a better level, right? It helps you identify the trends better, right? Is a larger ruler. So we use the 30-minute. The reason why we're doing the 30-minute is because we're still intraday trading on the 5, right? That stays within the multiples. So the 30 minutes within the multiple of 4 to 6 on a 5, the 5 minutes within the multiple of 1 to 5 on the 1. So you're able to say, okay, my 30-minute trends here. Remember, we talked about the 1 can get you into the 30. No, excuse me, the 5 gets you into the 30. So the 1 gets you into the 5 gets you into the 30 gets you into the 4 hour, right? You're following? We get the 5 gets us into the 30, we set that trade, we go. We then go into the 1 and we're following the trend. Now we have to go ahead. We look at the 5, we look at the 30, make sure there's still a confluence and then agreement. We're not worried about the volatility in here because we're too busy just scalping and you know, just chopping the market up. Makes sense, right? So at the end of the day, I want you guys to know the importance of trading trends because if you are still living in the candle, this will never work out for you. You're going to get fucking freaked out here with all this nonsense, right? But if we have the system, we know it's color coded, right? And then we're like, wait a minute, the 30 has proven itself more times than not, and it's a larger time frame. Now, hey, dum dum, you have psychologically created the proper bias, right? Because the 30 minutes, the larger time frame, you're not fighting against the trend. You have now created the bias necessary to believe in the candles that are printing in your general direction. This allows you to be more profitable. This concept evades so many traders. It is just mind blowing. Mind blowing how it just and guys, you now know why I had you guys, right? Just when we were going through the last 4 hours, I was like, the trades look the same, right? It matches the larger time frame, right? Right? You see how now it all just comes together. You don't have to, and this is the other thing too, right? The 1 minute is going to keep your risk small. Just keep it so small. The 30 minutes going to let you take advantage of the move. We don't need to overcomplicate this, and more importantly, right? We probably don't need so many trades. And there you go. You remove the candles and use a price line. So that's why the system has the price line. You basically hide the candles. Now you got your price line. Okay. Okay. Sebastian, if the trend on the 30 minute is down, you put an ES in there, right? The thing is that let's say you were buying the peaks and valleys on the 1 minute, you can't do it with an ES because you end up closing the ES on the 30. So what you do is you go to MES and 10 MESs equal one ES. So now you're in the 1 minute scalping with 10 MESs. You're following it down. You then choose whether you want to follow it up. But if we go ahead and we do it in the same direction, we have double exposure. Essentially, a 2 to 1 is a dynamic 2 to 1, right? Where you're always trading with directional bias, aka your edge, the 1348 way. This is going to lend itself to so much confidence, right? You want another example? All right, let's do another example. This is 10 MASs, right? This is one ES, the 30 minute, right? There you got a 30-minute trade design right here. That's one ES right here. Let's go ahead. This is Wednesday on the 5th. Let's go to Wednesday on the 5th here, right? Wednesday on the 5th. Oh, GG flip. I'll take that. It breaks the band, right? Here we go, right? Another band flip. I'll take that too. I'll take that too. And so guess what's happening? While you're busy scalping this and maximizing your earnings here, right? Because this is the 1 minute, it's going to take you all the way up to an exit. This bad boy's making money. While you're busy doing this, it's that this is just going. Does that make sense? But do it again. This is Tuesday, right? Trade design down. They got a red band. Okay. Let's go to Tuesday and let's look for, oh my God, the 1 minute right here. Nice. Make money. We don't touch this part, right? Make some money here. You're scalping, right? We don't touch this part. It works its way all the way to here, all the way down. Oh my God. Bingo! Hot potato. And if the 30 minute doesn't work out, you've reduced your risk with the 1 minute. That's what I was getting to. Bing, 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 bing. So we're breaking shit now. But yeah, guys, makes sense. Got plenty of examples of this, right? Plenty of examples. So this is Tuesday. This is also Tuesday. I want you guys to see this, right? So Tuesday is a green band right here. You get your green GT in the band right here. You can, oh my God, sweet baby Jesus. All we done is making money. Okay. Oh, jeez. Right. Here we go. Check this out. Red band here. 1 minute GT red band here. We don't do the crazies. We don't want to trade with the crazies. And look what happens on the 30. We got a bunch of crazies over here. We got the crazies. In the 30 minute. We don't have to do that. But fucking chop. Who's happy? Who's happy? So all of this doesn't happen unless we believe in trends. Otherwise, we're just gonna succumb to greed and fear every single candle print. So we have to submit to a larger time frame. We have to submit to a greater power, right? The greater power is GT, the greater power is the 5, the greater power is the 30. These are greater powers. This is what aligns our faith. And when our faith is aligned with enough back testing, aka building the habit so you no longer succumb to fear and greed, it's when you go ahead and make a lot of money. Now, when you go ahead and you sit in front of the charts all day looking at how to be a better trader, things like this present itself. How big does your port have to be to support this strategy? Well, you need $500 to support an ES contract, and you need $500 to support 10 MES contracts. So that's $1,000, right? But come on, man, $5,000. If you don't have at least five to $10,000 to jump into the markets and really, really change your life, that means you haven't tried hard enough to change your life. And so therefore, you got to try harder to change your life first, save up the money, then come into the markets. Because if you think that you're going to put the cart before the horse, you're sadly mistaken. This is why a lot of traders end up failing because they look at the markets as a solution to their life problems, and they look at the markets as a way of, I guess, filling in the gap. Right? If you're a lazy person, you're going to be a lazy trader. It's just going to translate to a one-to-one. You're never going to make it in life, dude. Right? Now, institutions use pretty much every time frame. Why? VWAP. But then, of course, like on the daily, VWAP doesn't work. You got to use a different type of tool, right? A different type of VWAP. It was like anchored VWAP or some shit like that, right? But yeah, guys, it's when you follow the trend, like you open yourself up to just so much greatness and just so much possibilities. So much possibilities. I mean, we have countless examples of this. Guys, let's go back to last Friday. We have an example of last Friday, right? Nice example. Here we go. So last Friday we had our band down, right? That was the band down. Cool. We had the 1 minute down until it was up. So while this candle retraced on the 30 minute, right, you can offset that retracement here. And then, of course, you got GG flip again, and you're realigned with the 30 minute. The amount of money you can make doing it this way, simply keeping it simple, is just dumb. Make sense? Yeah. So I guess, guys, I'm done. Yes, you can set the 30-minute color change. Yes, you can set 30-minute GT color change in your alerts. Commit to that trend, and then scalp it onto one as long as it's following the trend. Don't get greedy, right? This is just another tool in your arsenal to make sure that you're getting to your 1.5, or 2% on a day, right? It's again is the equivalent of having multiple prop firm accounts. They're just on different time frames doing the same thing. Okay. And doing this, you're never gonna feel like you're missing out on the trade. You know, um, you're gonna feel more confident in your trades because you're now gonna start conditioning yourself for your trades to align in a larger trend, right? Because how stupid would you look fighting with yourself? It'd be stupid, right? Like, yeah, boy, short here. The trend's going here. You know that to maximize that trend going down, and also have to align yourself with it on the smaller time frames. Otherwise, you render your position on the 30 pointless, right? Yeah, you got it now. I'm glad you do. So, guys, I gotta go. And it's been a hell of a journey, but there's nothing more to give here. The urge has been squoze. Um, yeah, it's just done. It's just done. We're done. Yeah. You know, it's 2022. We started this in the beginning of 2022. We're approaching 2026. 4 years. And I'm hanging up my coat, guys. You want to work with me in longevity? I got you. You want to hire me for one-on-ones? I got you. But the system doesn't need a face anymore. The system has enough proof that every single one of you guys can grab a stranger, a loved one, and say, look at this. It doesn't lie. And that's what hopefully that's what we get out of all this, right? We can literally just change lives. We can. We can better lives out there. Just got to spread the word. But yeah, I don't need my face anymore. Yeah, we're done. I'm 7 more days. 7 more days. It's my big day in 7 days. Technically retire, but um, scroll through the comments. Earn it. All right. Ask other members in the community if they have the link to it, or to provide you their link, or just scroll through the comments and earn it. Put in the goddamn work. I'm done. We're done. Sydney Sweeney is a spokesperson. It'll be hot. Peace.